This is Optimal Finance Daily, episode 1243, 6 Long-Term Savings Plans That Make Good Financial Sense, Part 2 by Jeff Rose of GoodFinancialSense.com. And hi again, I am Dan. I'm your host and narrator here at the show, bringing you some of the best blogs on personal finance. I'm here every single day reading to you from these great blogs. And if you didn't know about this already, you are automatically entered into our book raffles if you're part of our free weekly newsletter mailing list. So if you're not on that already, now's a great time to join. Just come by oldpodcast.com to sign up. That's oldpodcast.com. Now, today's post is actually a continuation from yesterday. So if you're new here, it'd be best to listen to that episode first, episode 1242. But if you're all caught up, let's hear part 2 as we continue optimizing your life. 6 Long-Term Savings Plans That Make Good Financial Sense, Part 2 by Jeff Rose of GoodFinancialSense.com. Long-Term Savings Plan Number 3. Save up the down payment for a home. Another long-term savings plan that can help you get ahead is saving the down payment for your own home. Doing so can help your finances in more than one way. First, saving up a large down payment for a home can help reduce the amount of money you need to borrow, and when you borrow less for your home, you'll enjoy a lower monthly payment and pay less interest each month. Secondly, saving up to at least 20% as a down payment for your home can help you avoid costly private mortgage insurance, or PMI. This insurance coverage can cost up to 1% of your home's value each year, but without any real benefit to you. As an example, PMI on a $200,000 home can cost up to $2,000 per year, or $166 a month. By putting down at least 20%, you can avoid PMI altogether and save that money instead. Long-term savings plan number 4. Save to upgrade your vehicle. While you may already have a car that you love, we all know it won't last forever. If you're looking for another long-term savings plan to get excited about, having a new car fund is an additional option to consider. By establishing this fund, you can save up for the inevitable, the day your car dies or the cost of repairs becomes unsustainable. With a car fund growing in the bank, you won't have to stress when it comes to replacing your ride with a new or used vehicle. In addition to your new car fund, you can also consider signing up for a rewards credit card that makes it even easier to save. For instance, the GM Buy Power card is an obvious example of a card that could really help in this respect. With this credit card in your wallet, you'll earn 5% earnings on your first $5,000 spent every year. Beyond that, you'll earn 2% back on every purchase you make. Your earnings will never expire, and your points are redeemable toward an eligible new Chevrolet, Buick, GMC, or Cadillac vehicle. Long-term savings plan number 5. Save even more money for retirement. If you're funding your work-sponsored or personal retirement accounts religiously and have even more cash to stash away, you might consider opening a traditional or Roth IRA. With a traditional IRA, your contributions are likely deductible on your taxes. However, you'll need to pay income taxes on your withdrawals once you reach retirement age and start using your account. With a Roth IRA, on the other hand, the contributions you make today are made with after-tax dollars. On the flip side, your money will grow tax-free until retirement, and you won't have to pay income taxes on your withdrawals after age 59 and a half either. As an added bonus, you can withdraw your Roth IRA contributions at any time before retirement age without paying a penalty. You'll notice I said contributions and not earnings. If you want to withdraw your earnings before retirement age, you will have to pay a penalty and taxes to boot. By and large, I think the Roth IRA is a smart idea for anyone whose income allows them to contribute. After all, having some tax-free income in retirement will probably make you feel like a genius down the line. Long-term savings plan number 6. Get your freedom fund in order. If you have the rest of your long-term savings plans in order, a freedom fund should be the next goal on your list. While this fund will look different for everyone, it should be filled with enough cash to give you the freedom to do what you want in life. Remember how I suggested you list your lifetime goals? Whatever they are, your freedom fund is what will allow you to achieve them. Once your finances and savings goals are in order and being fully funded each month, you can use your freedom fund to start saving for whatever you want in life, whether that's the freedom to take a chance, the financial freedom to quit your job, or the freedom to take an amazing trip of a lifetime. When it comes to your freedom fund, you are only limited by your dreams and the amount of money you can save up. Final thoughts. While figuring out where to invest your long-term savings can be a challenge, there are plenty of different goals to save for if you really think about it. And with money in the bank to fund those goals, you'll be in the best position to cover an emergency expense, retire earlier, and live the life of your dreams. If you're struggling to figure out how to allocate your long-term savings, don't forget to sit down and create a list of short-term and long-term goals. Once you do, the right plan for your money will likely come together on its own. Don't forget, this is your life and your money we're talking about. When it comes to how you should spend and save, there is nothing more important than your own goals and dreams. You just listened to part 2 of the post titled 6 Long-Term Savings Plans That Make Good Financial Sense by Jeff Rose of goodfinancialsense.com. All right, that'll do it for another installment of Optimal Finance Daily. Hope you have a very happy Tuesday. Thanks so much for being here with me and listening each and every day. I'll see you back here tomorrow, where your optimal life awaits.